Hello everyone. So, in this lesson of Module 2, we will be discussing about taxes and legal structure of your Amazon FBA business. Basically, this is just an overview of taxes and legal structure. You will have to need to always confirm with a qualified accountant before taking any steps regarding this matter. We'll be just giving you an overview of how taxes and legal structure would work on your Amazon FBA account, basically. So this is important because thousands of your thousands of pounds of your money is at the stake. It can also lead to account suspension if you do your taxes and legal structure wrong. Also, knowing everything before you're setting up the foundation is always important. So done right, your business is protected, credible, and ready to scale. So this is the most one of the most important matters is taxes and legal structure. You need to be on top of it all the time. Okay, two things to get right basically. Number one is the legal structure, number two is your taxes. So the legal structure means either you are a sole trader or a limited company. This decides how you are taxed, how much admin you have to do, and how protected you are. So this is basically your legal structure. Are you a sole trader or a limited company? Your taxes. So in taxes, the three you must know as an Amazon UK seller are income and corporation tax. Number two are is national insurance, and number three is VAT. So we'll be discussing these in detail up ahead. Okay, so sole trader versus limited company legal structure looks like this. Sole trader is basically the simplest ways to start. This means you plus the business are legally the same entity. So both you and your business are being legally registered under one entity, which is you as a sole trader. This is quick, obviously cheap, no heavy admin work is required, and you just need to file a tax return per year. But the issue is this, as a sole trader, it's not the business is not scalable. You cannot add your partners, you cannot add company directors, you cannot have the proper structure that a company brings. So it is good to start, but obviously not recommended in the future, and you have to shift to a limited company, which is a separate legal entity, a limited liability company, and your personal assets are protected under the limited company. Tax advantages are possible in limited companies, which are not possible in sole trader. You have to pay corporation tax on company profits only, while in sole trader you pay income tax on your profit. But obviously it comes with some downside as well, but we have to deal with it, which is you need to do more work as admin, or you have to hire an admin for accounts filing. You have to sometimes hire an accountant. It can be done manually personally if the one does the effort to learn it, but in if it's more complicated for you, you have to hire an accountant. So that's basically the difference between sole trader and limited company. Going ahead, it's always recommended to have a limited company. Okay, so as we discussed, when you start, you have to, if you want to start with sole traders, that okay, but it's always recommended to start with limited company and go ahead with it. So as you grow, you will already need limited company, so why not in the start? Obviously, it depends on your circumstances as well. So run this exact decision point, this decision on your accountant, and don't just copy someone who tells you to do. Obviously, consult with your accountant first time. Okay, so the three taxes you must know are income or corporation tax, national insurance, and VAT, the big one, the big issue. Okay, so income tax on your profits, you basically pay your income tax. If you are sole trader, you pay your corporation tax if you are a company, a limited liability company. National insurance. Sole traders pay class 4 national insurance on profits charged on top of on top of income tax. So national insurance is an extra type of a tax that some sole traders have to pay on top of your income tax. So you have to keep in mind national insurance as well, being as a sole trader. This is also a drawback of a sole trader. In case of corporation, in case of a company, you only need to pay corporation tax on top on your profits. Basically, VAT, value added tax, which is the sale tax of your products. It's a value added tax. The rules hold a trade. Basically, we'll be discussing VAT in detail up ahead. Okay, what's income tax versus corporation tax? Income tax is for a sole trader, corporation tax is for a limited company. Okay, on profits, income tax is payable on profits. Corporation tax is also payable on profits. So from 0 to 12,570, it's basically 0%. If you are doing up to 50,000, it's 20% basic rate. If you are doing up to 125, it's 40%. If you are doing over 125k in pounds, you have to pay 45% of your profits to the government. This you have to make sure you can take a screenshot. We'll be sharing these slides in the video description as well. You can research on this matter yourself as well, but these are the basic rates. In case of a limited liability company up to 50,000, you have to pay 19%, and on profits up to 250,000 you have to pay 25%. So there is the advantage in corporation tax or a limited company here as well. So up to 250k you have to pay 25%, while as a person, as a sole trader, you have to pay 45%, which is a lot. So that's why going ahead, it's always recommended to have a limited liability company plus dividend tax if it's applicable. Okay, VAT. So if you are UK based, you are charged VAT after you reach 90,000 in revenue. So this is not in profit, it's in revenue. So once you hit the sales of 90,000 within a certain 12 months turnover, you have to pay VAT to the government. You have to be registered VAT. Okay, so yes, as I discussed, it's turnover, which means sales, which means revenue, not profit. So start small and you generally don't register for VAT straight away. So if you are on yearly basis, you are keeping everything under 90,000, you are not eligible to pay VAT. So which means basically that you can sell a bit cheaper and pass on that benefit to the customer, but compared to the VAT registered sellers, they have to pay VAT on top of every unit they sell. So they have to pay taxes on forward to the government. So they have to keep prices high. So this is an edge for a new seller, that you don't have to pay VAT from day one if you are UK based, if you are a UK resident. If you are not a UK resident, if you are selling from overseas, from day one you have to pay VAT. You have to keep this big point in mind. If you are selling in UK from abroad, you have to pay VAT, which is around 19% from day one. HMRC will come hard at you. There's no way to escape, and you have to pay this at all. Okay, so two more VAT points worth knowing. You have to keep records of all the VAT that you are paying. So even when Amazon at some points, if you let Amazon collect VAT for you under marketplace rules, you have to keep record keeping yourself for the future to be safe. And you can reclaim VAT on fees. So the fees that you are being charged by Amazon, which is FBA fee, which is referral fee, we'll be discussing them in upcoming lesson, which is storage fee, which is advertising fee. All these you can reclaim back from HMRC if you file them properly. So you need an accountant for all this. If you can do it personally, you can research it, learn it, well and good. Otherwise, you'll need an accountant for these purposes. Okay, so registering and going digital. How to register? Basically, sole trader is registry is easy. Just register yourself for self-assessment on gov.uk. You'll get a UTR, unique taxpayer reference. For a limited company, this it's also easy. You just go to company house website or gov.uk and you register your limited liability company with a 15 or 20 pounds fee. Simple as that. If you still can do this simple process, you can let someone do it for you as well. Making tax digital, rolling out from April 26. Basically, sole traders with income over 50,000 must keep digital records and submit quarterly updates to HMRC. So this is just a recent update. So that's why you have to use approved software like Zero or QuickBooks, not a spreadsheet, or obviously you can use an accountant to do this for you, make everything digital. Okay, so it's a bit. Let's get to the recap. We discussed structure, a legal structure, which is sole entity, and company. Number two, we discussed different types of taxes. As a sole trader, you have to pay income tax plus national insurance as well. As a company, you have to pay only corporation tax on your profits. VAT is for all. If you are doing profit or not, you have to pay VAT because it's on revenue. If you cross 90K threshold and are UK based, you have to pay it. If you are a broad seller and want to sell in the UK, you have to pay it from day one. 19% VAT you have to pay it. But after all this, as we discuss, get an accountant who knows e-commerce. They'll save you more cost in tax, time, and stress, obviously, and they will also help you in saving your taxes and keep clean records for you for the very first day, from the very first sale. That's all from the legal structure and entity and taxes lessons. See you in the next one.